Cathie Wood selling Tesla stock? Yep, that's right. According to regulatory filings, this week Cathie Wood sold over $136 million worth of Tesla stock. While the company still has a sizable stake in the popular electric car maker, Cathie Wood is locking in some gains and buying other stocks in a major way. Today we'll take a look at some of the stocks she is buying and if you should buy them too. The first stock Cathie bought in a major way was Taiwan Semiconductor Manufacturing Company, ticker symbol TSM. Cathie bought TSM on a Friday, January 22nd, for 3 different ARK Invest funds. In the ARK ETF, Cathie bought over 545,000 shares. In the ARK ETF, Cathie bought over 64,000 shares. And finally, in the ARK ETF, Cathie bought 150,000 shares. That represents roughly about $98 million. Taiwan Semiconductors is one of the largest companies in the world, sporting a $623 billion valuation. And shares of the company have also been on a tear over the past year, up over 130%. This week, the company made news when incoming Intel CEO stated that the majority of Intel's future products may be made in-house. Shares of TSM traded down on the news, but are still near all-time highs. Also in the news was the fact that Samsung announced plans to build a $10 billion chip plant in Texas. The move is predicted to give Samsung an 18% share of the semi market, but TSM still holds a dominant 54% market share. Next stock that Cathie bought in a major way was Takeda Pharmaceuticals. In fact, ARK bought this stock 5 different times for the Genomic Revolution ARK ETF. The buying started on the 19th with over 597,000 shares. Then again on the 20th with over 614,000 shares. On the 21st, Cathie bought the stock twice for a total of 915,000 shares. Finally, to cap off the week, the fund purchased over 1.6 million shares on Friday. That represents about $68 million. Takeda has a brand portfolio of drugs and is also involved in the COVID-19 vaccine trials in Japan with Moderna. The company also pays a sizable dividend of about 86 cents per share. That equates to about a 5% yield at today's price. During a recent investor presentation, CEO Christoph Weber said the company had the goal of reaching $47 billion in revenue by 2030. That represents 50% growth over what the company did in 2019. Given the fact that TAK has a valuation of about $54 billion today, shares would likely rise considerably if the company is able to achieve that goal. The next stop is Synopsys Incorporated, a company that's main products revolve around silicon design, intellectual property, and software integrity. In 2020, the company had $3.7 billion in revenue, earning about $4.27 per share. Over the past year, shares of Synopsys are up over 77%. Cathie bought the stock 4 times this week, starting on the 19th, buying over 65,000 shares. On the 20th, there was actually 2 purchases of about 61,000 shares. And finally, on the 21st, they bought 35,000 shares. These purchases represent nearly $44 million. The next stocks Cathie and her team bought large positions in are actually fairly well-known companies. Cathie bought over $120 million of Tencent Holding, a gigantic conglomerate holding company in China. Cathie bought over $21 million in JD.com, one of the largest e-commerce sites also in China. Cathie also bought $19 million of CRM or Salesforce.com based here in the United States. And here's an interesting one. The day before Netflix reported earnings this week, ARK bought over 48,000 shares of Netflix, which soared the following day after beating subscriber expectations. You think they had any inside information on that one? Other well-known stocks Cathie bought this week were Adobe, PayPal, Pinterest, Nvidia, Nintendo, and Shopify. So will Cathie Wood and her team sell more Tesla shares in favor of other stocks in the coming weeks and months ahead? I would assume it's likely. Considering Tesla's massive gains over the past year, selling shares allows ARK to achieve performance metrics that attract new investors. Additionally, the more Tesla shares rise, the more risk ARK takes on if and when Tesla shares drop. So diversifying away from the popular EV maker actually does make some sense. If you want to see all the stocks Cathie and her team have recently bought and sold, I'll include a link in the description below with a full list. Let me know what you do when you have a stock like Tesla that has soared in value. Do you sell it, or you just hold and continue to let your winner run? Thanks for tuning in today.